Hey everyone, Rivian gave investors a lot more information about what's happening at the company. The stock price is down over 20%, and so you can understand a lot of investors are talking about Rivian stock. So I'll go through their latest developments, and so we can understand why everyone is talking about Rivian stock now after the company gave investors all this new information.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Okay, so one of the most interesting developments throughout 2023 was the quickly rising interest rates. And Rivian saying that the historically high interest rates had a negative impact on demand. Most people that purchase a vehicle purchase it with financing, and interest rates are a big determinant of what their monthly payment is going to be. Most consumers, when they look at a purchase with a monthly payment, they're not looking at the sticker price of the vehicle, they're looking at the monthly payment. And so as interest rates increased, that made Rivian's vehicles even more expensive to buyers. Now, Rivian's vehicles are already expensive, and when you couple that with higher interest rates, the monthly payment made it less accessible to buyers. Now, there may be people that find Rivian's vehicles attractive and they want to buy it, but that monthly payment plus the sticker price has made it unattainable. So that really decreased demand for Rivian's vehicle, and Rivian's was not the only one to experience this phenomenon. You've probably heard Elon Musk from Tesla talking about how higher interest rates are hurting demand for Tesla's vehicles as well. All car companies are experiencing this impact. Higher interest rates makes their vehicles less attractive, makes consumers less willing to purchase a vehicle. And so what are they doing instead? They're holding on to their cars for longer. If they've got a 5, 6, 7-year-old vehicle and interest rates are higher right now, they're saying, you know what, let's keep this car for another year. Let's see what happens next year. Let's see if interest rates go down, and we'll keep this car for another year. And then for new car buyers, those that are, coming into the market for the first time to buy a car, they're saying, you know what, taking Uber looks more attractive now. Uber and Lyft combined with public transport, I'd rather do that for a little while longer than purchase a new car given higher interest rates. So every part of the market is constrained when you look at higher interest rates. So those historically higher interest rates in 2023 hurt customer demand. The trouble is that they're likely here to stay for 2024. The Federal Reserve has indicated that they would cut interest rates about 3 times, 25 basis points each in 2024, which would mean interest rates, if you were looking at a car purchase and interest rates were around 5.75 or 6.75, they're going to be about 75 basis points lower. So instead of 6.75, you'd probably look at 6%, which, as you might imagine, is not a huge decrease from where it was in 2023. So I don't suspect that will cause demand to increase. And what Rivian is saying is that their order bank has notably reduced over time as deliveries have more than doubled in 2023 versus 2022, along with the impact of cancellations due to both the macro environment and the customer factors just referenced. So remember back when Rivian was bragging about how many thousands of customers orders it had? Hasn't been talking about that all that much, hasn't been promoting that, kind of brushed that aside, and now telling investors that, look, we don't really have that much order backlog. And those that we do have, customers, when it comes time for them to take their order, they're canceling instead of going through with it, right? Because these customers have been waiting for their specific customer order for maybe a year, maybe several years. And when their turn is up and when it's time for them to take delivery, they're canceling instead. People would rather forfeit their deposit than go through with the purchase, which says a lot about demand right now for Rivian and other EVs, that customers are canceling orders and losing their deposit rather than going through with their purchase. It's not looking good. And most of the talk around EV companies of late has been on the bad side. There's been a lot of bad news coming out. Just a few days ago, I did a video on Ford highlighting its sales of its SUV Mach-EV were significantly, sharply lower, were the words that Ford said, comparing their January 2024 sales with their January 2023 sales, saying that in 2024, sales were sharply lower. Really? Sharply lower? I thought all EVs, all cars are going to be EVs. I thought the consumer was transitioning to EV. I thought everyone was going to have an EV by 2030. All of those ambitious predictions for EVs are turning out to be too optimistic, way too optimistic. And now all the discussion is, well, maybe that's not going to be the case. Maybe instead of every single car being an EV by 2030, maybe it's going to be 1 out of 10 or 2 out of 10, right? And so those optimistic forecasts have been coming down. So for Rivian, what they're saying for 2024, their key focus is on increasing demand to achieve their 2024 targets. And what they mean by increasing demand, from an investor perspective, what I take this to mean from my experience in looking at what management means by this is more spending. It means more spending on marketing, more spending on advertising, more spending on incentives, more spending on offerings like more dealerships. They're what they see as dealerships. Rivian has their own little locations, which they call Rivian Space. They're going to expand those, right? They're going to want more of those to have more access to customers to increase demand. All that means more costs for a company that's already losing billions of dollars on the bottom line. That can explain a lot on why everyone is talking about Rivian, why the stock price is down more than 20% following these latest developments, and continues to highlight the difficulty in starting a new car company, the difficulty in not just starting a new car company, but starting a new car company on the most innovative technology, which is the EV and all the innovative technologies that are going into Rivian's vehicles. It's really hard. It's really challenging. It's really difficult. Rivian has already spent countless billions of dollars to get itself to this position where it's still losing billions of dollars and having difficulty finding growth. It's forecasting flat year-over-year production. It's difficult. It's challenging. You can understand why. I've told investors that it's not an attractive industry to invest in. It's not very lucrative. It's costing investors, companies, billions of dollars to get to this point, which is at a point where it's still losing billions of dollars. So take this information to light, adjust your forecasts, adjust your optimism around EVs, bring those down a notch or 2 or 3, and then reevaluate whether or not you want to invest in this category. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.